Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is September 4th, 2025, and we're diving into Shoe Carnival's latest earnings report for the second quarter of fiscal 2025. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Shoe Carnival has been making some strategic moves, and their latest earnings report provides a lot of insights into their performance and future direction.
Revenue and profitability overview. Let's start with the top line. Shoe Carnival reported net sales of $306.4 million for the second quarter, which is a decrease from last year. However, their gross profit margin expanded significantly. John, can you elaborate on this?
Absolutely. Despite the 7.9% decline in net sales, Shoe Carnival's gross profit margin increased by 270 basis points to 38.8%. This improvement is largely due to their re-banner strategy and disciplined pricing, which have helped optimize their merchandise mix and improve margins.
And what about their net income and earnings per share?
The company reported a net income of $19.2 million, translating to an EPS of 70 cents. This is a notable achievement as it beats the consensus EPS forecast of 55 cents by over 20%.
Strategic initiatives and growth. Shoe Carnival has been focusing on its re-banner strategy. How has this impacted their performance, especially during the back-to-school season?
The re-banner strategy has been a game changer for Shoe Carnival. The Shoe Station banner, in particular, has shown an 8% growth in comparable sales year-to-date. During the back-to-school season, they achieved positive comparable sales and margin expansion, which is crucial as this period accounts for a significant portion of their annual profits.
And how is their financial position supporting these initiatives?
They are in a strong financial position with zero debt and double-digit cash growth. This allows them to fund their growth initiatives and be ready for strategic opportunities without financial strain.
Operational efficiencies and future outlook. John, let's talk about operational efficiencies and the future outlook. How is Shoe Carnival managing its operations?
Shoe Carnival has strategically increased its inventory by 5% to ensure better availability of key items, which has contributed to their margin expansion. They've also invested $24.4 million in capital expenditures, primarily for re-banner conversions, which are expected to pay off in the coming years.
And what does their outlook for fiscal 2025 look like?
They've adjusted their net sales outlook to $1.12 billion to $1.15 billion and increased the lower end of their GAAP EPS range to 170 to 210. This reflects their confidence in the re-banner strategy and the positive momentum from recent performance.
Key takeaways. In summary, Shoe Carnival has delivered a strong performance in Q2 2025 with significant margin expansion and a successful re-banner strategy. Their financial health and strategic initiatives position them well for future growth. John, any final thoughts?
Shoe Carnival's ability to beat EPS expectations and expand margins is impressive. Their focus on strategic growth and maintaining a strong balance sheet bodes well for their future prospects.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Shoe Carnival's performance in the comments below.